Welcome to Superior Profit Weekly Market Roundup 21st July 2018. I am Sagar Nandi, Chief Analyst and Trader at Superior Profit based in Singapore. I will not spend time to introduce myself. If you are interested to know more about me, the company Superior Profit, or more importantly how it can help in your trading, you may visit the website superiorprofit.co and click on the About menu. Before we begin, we go through the standard disclaimer. This demonstration is for educational purposes only. It is designed to share information on Superior Profit's trading system. The information presented here should only be used by people who are aware of the risk inherent in trading. Past performance is no guarantee of future return. Superior Profit is not an investment advisor. This session is not for any recommendation of buying or selling stock or any other instrument. Superior Profit will have no liability for any investment decision made by its audience. As usual, we will analyze the two key commodities, oil and gold, that tend to impact related stocks. When we swing trade stocks, we like to align the trades with the market's direction. We analyze market's direction using Nasdaq and NYSE market breadth and also technical analysis of the 4 broad market ETFs. In addition to aligning our trades with the market, we like to align them with the industry's strength or weakness. We study that using Q-Edge industry scorecard and heat map. We will carry out this top-down analysis today. The Q systems can also be used for bottom-up analysis. But in the weekly market roundup, we will primarily go through the top-down analysis. Along the way, we may review some of the recent ideas shared in Q Traders Forum and try to look for potential trades for the coming week. That was the last slide of the presentation. Let's move to live system. We begin our commodity study with oil. We are looking at the oil ETF USO using weekly backdrop chart and daily hop-on chart. Together we call this at a glance template because it helps us decide if there is a low risk swing trade entry opportunity at the right edge of the chart in only a few seconds. From the weekly chart, we can see that the bearish headwind signal could catch the very top. This week, US oil dropped further, however, ended the week with a bullish shape candle. Activity was very high. Last week ended with a bearish shape candle in the daily chart. That time the weekly was already magenta color. In the last market roundup, I discussed that if oil went down and gave us a magenta color candle in the daily chart, that would signal a trend following go with flow short trade opportunity. This week, indeed, oil went down. However, on Monday, it opened with a gap down. Therefore, we didn't have any low risk swing short trade entry opportunity on Monday. Monday closed near the yellow direction line. Throughout the week, it didn't move much, slightly went up. That gave rise to the lower tail in the weekly chart. Because of the gap down open on Monday, we didn't have any swing trade opportunity, though oil moved in our anticipated direction. However, we did have a very profitable gap short day trade opportunity on Monday. We are now looking at US oil using Q fine-tune intraday chart that we use for day trade entry or for precise entry of swing trade. On Monday, price opened with a big gap down, much below Friday's low. Soon after that, the early range high and the early range low lines form. On this candle, price broke below early range low, giving us a gap short day trade opportunity. Entry would be at this price level. Stop would be just above early range high. By the time price came to this level, it had covered much more than risk distance and the day traders could book profit. Now we are studying the gold ETF GLD using at a glance template. From the weekly chart, it is clear that gold is very weak and it is underperforming the market, that is shown by the white relative performance line sharply going down. There is a watermark support level in the weekly chart that was broken by this week's candle. This week ended with a long lower tail candle. The shape is somewhat mixed because though it has long lower tail, it also has solid body. If gold could recover and go above this watermark support level, we might start to look for long entry opportunities. In the daily chart last week, it was inside a triangle pattern formed by this memory resistance line, and there was a memory support line at that time. Since then, price has broken below the memory support. It is in clear downtrend. There is memory resistance nearby. Therefore, we are not going to take any long trade at this point. Price is oversold. Therefore, we are not going to take any long trade either. From commodity study, we now move to market breadth analysis. Every week, we study market breadth using Nasdaq Composite Index and NYSE Composite Index, both using weekly charts. Because this analysis is using broad indices and longer-term weekly charts, this is to be used more for longer-term investment decisions, not so much for swing trading and certainly not for day trading. This week, Nasdaq formed an indecisive shape candle with very small body and lower tail as well as upper tail. It has displayed a bear release signal in the weekly chart. Nasdaq's internals are mixed. New high low went up, it closed above zero. Advanced decline went up but closed below zero. Up down volume went down, closed below zero. This is showing that, as was in the previous week, more Nasdaq stocks are going down and they are going down with higher volume, though that is not apparent from the index candle chart. What about NYSE? For several weeks, the NYSE index is moving inside narrow range that continued this week. This week's candle has narrow body. It is an inside candle. That doesn't give us any clear idea of the market's strength or weakness. It is indecisive. In terms of internals, new high low went down, closed above zero. Advanced decline went down and closed below zero. Up down volume went up but closed below zero, showing that for NYSE also more stocks are going down and they are going down with higher volume. Again, that is not apparent from the index candle. If we combine the candle chart with the internals, then we come to the conclusion that over longer term, both the Nasdaq and NYSE are in uptrend. They will remain in uptrend until these memory support lines are broken. Looking at the charts from the right edge, we see that market breadth is indecisive, both in terms of price move as well as in terms of the internals. Let us see if that same conclusion holds from the market ETF study. We are now studying S&P 500 ETF SPY using at a glance template. Last week in the market roundup, I had mentioned that many of the market ETFs were at or near resistance levels and suggested not to take many long trades at that time. That analysis was appropriate. In the weekly chart, SPY formed a very indecisive shape candle. Doji-like candle, very narrow body with both upper and lower tails. In the daily chart, price was near watermark resistance level. It hovered around that and stayed at approximately the same level. There is no clear direction at the right edge. We may stay away from taking any long trade because price is near watermark resistance. If anything, we may look for low risk short entry opportunities. Nasdaq ETF QQQ using at a glance template. QQQ weekly candle also ended with an indecisive shape candle, narrow body and with both upper and lower tails. In the daily chart, it mostly moved sideways. Again, it is at a very high price level near upper boundary, just above this watermark resistance level. If QQQ falls below the watermark resistance level, you may look for low risk short entry opportunities for swing trade as well as for day trade. Dow Jones Industrial Average ETF DIA. Last week it was at the weekly memory resistance line. This week price tried to go above that but failed and closed below the memory resistance line. In the daily chart, price initially tried to go up but went down. It reversed from near the daily memory resistance line. Dow Jones Industrial Average ETF is in uptrend in the daily chart. However, there is no long trade setup. There is no short trade setup as well. The last ETF that we study, Russell 2000 ETF IWM. This was the only ETF that dropped 1 week ago. This week it tried to go down, hit the weekly memory support level and precisely reversed from there. This week's candle shape is neutral, color is also neutral. It is inside a kind of triangle pattern formed by watermark resistance and memory support. Until it breaks out of this weekly triangle, the direction will not be clear and we may avoid taking directional swing trades. If somebody was keeping an eye on the memory support level that was there in the weekly chart, one could take a very precise day trade using intraday chart. In the daily chart, we can see that the weekly memory support level was hit on this candle. That was a magenta color candle. There was no swing long trade opportunity. However, when price hit the weekly memory support level, that was at 166, using fine-tune intraday chart, one could take a very precise and low risk long trade that ended up being extremely profitable. Let us switch to the intraday chart to see exactly where the entry could be made. This is the day in the daily chart where price tried to go down, hit the 166 level. That is where we had the weekly memory support line, and then price reversed from there. One could set an alert on their trading platform or on Thomson Reuters icon at this price level 166, and once the alert came and they also saw that on the down bar it had heavy activity, on the immediate next up bar it had even higher activity. They could take a long trade right at the close of this candle, putting stop just below recent low. That day closed at this price level. By that time already the risk distance was covered, so the trader could book partial profit or full profit. If the trader decided to hold partial position, by the end of that week the trade ended up giving much higher profit. This technique is very useful both for swing trade entry opportunities as well as for day trade entries. When one can look at a memory trend line in a higher time frame and then precisely enter the trade using a lower time frame chart. Let me illustrate with a swing trade how the same principle could be applied in a stock that was apparently in heavy downtrend, but the Q traders could profit handsomely by taking a long trade using the memory trendline support of longer time frame chart. This is TEO using at a glance template, Telecom Argentina. I had shared this daily chart with some traders on this day when it gave us a bull release signal and price went up significantly. Looking at the daily chart, there was no long trade entry opportunity. However, I noticed that in the weekly chart, in the same week, it displayed a bullish headwind signal. Price tried to go below this weekly memory support line that was coming from far away and was going up above that. Therefore, again using the longer term weekly memory support line, the bull release signal, heavy activity during the down move that could point to possible exhaustion, one could take a long trade right at the close of this yellow candle, put stop just below recent low, and by the time price came to this level, it covered more than risk distance and swing traders could put profit. This stock was fundamentally very strong. Let us check it out using QVital. In QVital, in auto mode, we have set it to auto mode now. We can type the symbol and click on the peer retrieval button. That will first retrieve the information about the root stock by connecting to Thomson Reuters icon. It is showing that it is retrieving the root stock information. That information has been acquired. Now it is retrieving the peer stocks. Again connecting to Thomson Reuters icon or Metastock Zenith. Once the peer stocks are retrieved, now it is going ahead and calculating the vital statistics. That calculation is also complete. Let's look at the vital statistics. we can click the broadcast button that will populate the stock tab and bring us to the stock tab. Instantly, using color coding, we can see that TEO even now has optimal valuation. And look at the dividend yield, more than 17%. It has strong earnings quality and also a short squeeze potential. When I identified the possible long entry on the at a glance chart, I had also checked the fundamentals using QVital, and the trade looked very attractive to me, and it ended up being very profitable. The principle that we could use in TEO for a swing trade, that is looking at weekly memory support line and entering a swing long trade on daily interval, we could use a similar principle in case of IWM, again looking at trendline support, in this case weekly trendline support, and then taking a very precise long entry on intraday time frame. If we combine the analysis of the 4 broad market ETFs, we see that this week was mostly indecisive. That is the same conclusion that we reached from the market breadth study. Let's see what conclusion we can arrive at from sector analysis. This is 4-week sector performance. Every week we study the 11 sectors. The red bar represents performance of this week. Green bar represents performance of 1 week prior to the red bar, and blue bar represents performance of 2 weeks before the green bar. Together they give us 4 weeks or about 1 month of performance. 7 of the 11 sectors went down. They came to the left of the zero line. 4 sectors went up. This shows a slightly bearish picture of the market. Interestingly, across all the 3 review periods, the picture is mixed. Some sectors went up and some went down. Also, there is a flip-flop across review periods. Financials went up this week, however, it was down 1 week ago. Industrials went up for this week and prior week, however, it was down before that. Information technology went up for 2 weeks, but it was down before that. Most of the sectors are displaying this kind of flip-flop. This is not the best time to take directional swing trades. Materials is the only sector that is not displaying the flip-flop across the 3 review periods, across 4 weeks. It is down for all the review periods. Is it the right time to take short trades in materials? Probably no. The best short opportunities might have already passed. Instead, one might look for reversal long trade setups if such signals come from Q Edge industry analysis and Q technical analysis. Financials sector went up this week and it also went up on Friday. You may look for a potential buy opportunity in this sector. Let's study the sectors using Q Edge. This is Q Edge. Here is a graph of sector performance over last 1 day and 5 days. On Friday, we can see that financials went up and consumer staples also went up. Let's look at the sector scorecard and heat map. Q Edge analyzes the 11 sectors across 12 monthly review periods and then more frequently over 10 days, 5 days, 2 days, 1 days, assigns a score for each of the periods and also applies a heat map. Let's sort the sectors over 5 days. The heat map instantly shows that telecom is the worst performing sector right now, followed by real estate. And financials is the best performing sector, followed by industrials. The pace columns show whether a sector is accelerating, and we can see that financials is accelerating. It is the best performing sector right now and it is accelerating. It was weak earlier for a long time. Therefore, if you can identify long opportunities in financials, those may end up being very profitable swing trades as well as long-term investments. Let's study the 10 best performing industries of this week. We are looking at these industries 5 days and 10 days scores. Several of the industries are retaining their strength from the previous week. The scores of this week are at approximately the same level as that of last week. Therefore, using previous week's industry strength, you could already start looking for long trades and probably book profit by now. Airlines is of special interest because this was weak for a long time and then it went up. You could catch the exact turning point using Q-Edge industry acceleration in real time. 3 airline stocks went up by 11 to 21%. United Airlines UAL gave one unambiguous and highly profitable breakout and gap long trade setup this week. You could also profit hugely from Q bullish headwind signal, that is the possible reversal signal, and this signal again captured the very lows of two other airline stocks, GOL and AZUL. Let's use Q-Edge to study the best performing industries, identify airlines, drill down into these three stocks, UAL, GOL and AZUL, and look at their fundamentals and technicals to see how you could use the Q signals to profit from their price moves. The analysis that Q-Edge does with the 11 sectors, it does the same analysis with hundreds of industries. Let's find the best performing industries for this week. The best performing industries for the week are shown with cyan colored score. Airlines is one of the best performing industries, and from the heat map you can instantly see that it was very weak earlier and now strengthened. Base columns are showing that it accelerated as well. Let's drill down to airline stocks. We can see the best performing stocks by sorting over 5 days percentage change column. We can see that 3 of the stocks, AZUL, UAL and GOL, went up by between 11 to 21%. Let's look at their Q charts. AZUL, it displayed a headwind at the very bottom. That signal came while the industry was starting to go up after prolonged weakness. Using that industry strength and the bullish headwind signal, one could start to look for long opportunities. The long could be taken either on this day, bullish headwind signal day. We can see that the weekly candle color was already yellow by that time. Therefore, when the bullish headwind signal came, it met all the checklist conditions of a headwind long reversal trade setup. One could take a long right at the close of this day, putting stop just below recent low, and as price went up, it covered much more than risk distance. The industry is strong. The candle is somewhat mixed. It has an upper tail in the weekly chart. However, when we look at the daily chart, we see that on Friday it had a gap up move. Price went down a bit from gap up open. That is what created the long upper tail in the weekly chart. When we study the daily chart, we see that the price pattern continues to be bullish. It came down after gap open, however closed above the watermark resistance level. Therefore, one might book partial profit and continue to hold partial position trying to let profit run. One might apply trailing stop using Q protection signal in such a way that the entire trade is risk-free from now onward. GOL, another airline stock, it displayed a bullish headwind at the very bottom. That was the time that the industry was starting to go up. The weekly candle color was already yellow. Therefore, GOL again met all the conditions of a bullish headwind reversal long trade setup. Entry could be made right at the close of this yellow candle, putting stop just below recent low. Price went up enough to cover much more than risk distance. The weekly candle is bullish, daily is also bullish. One might book partial profit and hold partial position trying to let profit run. United Continental Holdings, the third airline stock. This stock opened with a very large gap up on this candle. Looking at that and the fact that it opened above the watermark resistance, one could start to look for low risk day trade entry opportunity as well as breakout swing trade entry opportunity in the long direction. Such a trade could be identified using Q fine-tune intraday chart. Let's see if a low risk entry opportunity was indeed there. This is UAL using fine-tune 10-minute chart. This is the day when price opened with a big gap up. Opening price was much above previous day's high. Soon after that, early range high and low lines formed. One could take a long just as price was going above early range high. That was a gap long day trade setup. Stop could be put just below early range low. That was never hit. As price came to the pause lines, more than risk distance was covered and day trader could book profit. This could also be taken as a swing breakout trade opportunity. Entry at the same price level. At the end of the day, partial profit could be booked and partial position could be held. As UAL has continued to go up, the swing trade remaining position is giving even more profit. The stock continues to be strong. Industry is one of the best performers. Therefore, in this case also, one may continue to hold partial position trying to let profit run. From best performing industries, we move on to worst performing industries. We are again looking at the worst performing industry scores over 5 days and 10 days periods. We can see for some of them like aluminium, silver, the weakness is continuing from previous week. And for some industries like heavy electrical equipment and to some extent for household appliances, the weakness increased suddenly in this week. In the previous market roundup, I had analyzed USO and expressed my bearish view on oil. Oil dropped this week and several energy industries also declined. Using Q360 degrees analysis, that is the industry weakness, stock fundamental weakness as well as technical weakness, you could take profitable short trades. In this case, the related commodity was also weak, so we had more reasons to look for short trades. Oil and gas drilling is one of the worst performing industries this week. Three stocks, RDC, ESV, and NE, went down by between 8 to 12 percentages this week. Q vital statistics showed that all of them were fundamentally overvalued and had poor earnings growth as well. That would prepare you to look for short opportunities. ESV gave a box short setup at a double top on the daily chart on 12th July. You could enter it using Q fine-tuned real-time chart on 13th July and make a significant profit. Why you might wait for one more day in this case is because the 12th July candle had a lower tail. Under such circumstances, one might wait for one more day and take the short trade using real-time fine-tuned intraday chart. That trade ended up being very profitable trade. Just now we saw that in airlines industry we could take very profitable long trades using the bullish headwind signal. Amazingly, once again, in this case, the bearish headwind reversal signal could catch the very top of both RDC and NE. You could use the insight from the bearish headwind signal and the fact that the industry was weak, the stocks were fundamentally weak. You could probably take very profitable short trades in RDC and NE as well. At minimum, you could protect profit in any existing long position. Let's use QEdge, identify the worst performing industries, locate oil and gas drilling, look at the fundamentals of these three stocks, and then look at their technical charts. In QEdge, the worst performing industries are shown with dark magenta color. Oil and gas drilling is one of the worst performing industries this week. It was somewhat strong earlier, shown by the cyan color scores in earlier periods. Let's drill down to oil and gas drilling stocks. In the stock panel, we can identify the poor valuation stocks from the valuation primary column. Any stock with poor valuation, that is overvalued stocks, come with magenta colored score. These three stocks, NE, RDC, and ESV, all have magenta color score in the valuation primary column. Therefore, all were overvalued and are still overvalued. The EPS columns are showing that these three stocks have very poor earnings growth in the recent quarters. So we had a situation where oil was bearish, this industry was weak, and we had these three stocks that were overvalued with poor earnings growth, negative earnings growth. So we could start to look for short opportunities. Let's see how you could use the Q charts to take very profitable and importantly very low risk short trades in these three stocks. ESV using at a glance template. Earlier ESV was going up. It hit the watermark resistance level. 1 week ago it tried to go above the watermark resistance but closed just below it with a long upper tail. Whenever Q traders see long upper tail, they start to look for short entry opportunity. In the daily chart, it crossed the watermark resistance level on this day. Next day, it had a long upper tail candle. Subsequent day, it had a solid body bearish shaped candle followed by another narrow body candle. One could take a short trade around this price level. Put stop just above recent high, and as price went down, more than risk distance was covered. The question now is whether one would book full or partial profit. The industry is weak, the stock is weak. However, price is very close to the trend line support in the weekly chart. Also near the yellow direction line that is going up. Looking at those possible support levels, in this case, one might book full profit. That is how combining the industry's strength weakness, fundamental strength weakness, as well as technical charts, we can decide intelligently when to book partial profit, try to let profit run on remaining position, and when to book full profit. In case of ESV, Q traders might book full profit. RDC, the second oil and gas drilling stock using at a glance template, we can see this week displayed a bearish headwind signal that could catch the very top. From there, price dropped significantly. Then price tried to go back to the same level, gave a bearish signal. Since then, moving up, down, but gradually going down. This week, it fell down heavily and closed below the trendline support, that is bearish. In the daily chart, price tried to go above the memory resistance level and then closed this day with a long upper tail. That was very bearish. That was the same time that price tried to go above this watermark resistance and closed below that. There was no Q trade setup. However, using the resistance memory line, resistance watermark line, and the very bearish shape candle, one could start to look for a short trade. The short could be taken on the same day. If so, the stop would be just above recent high and price went down much, giving much more than the risk distance. Risk distance was only this much, and we ended up having much more profit. What to do with the stock in this case? Should one book full profit or partial profit? In case of RDC, it broke below the trendline support in weekly chart and also the daily chart. That is very bearish. Because it has given much more than the risk distance, partial profit will surely be booked. As price has broken below the support trend lines, there is no reason probably to book full profit. Partial position can be held with trailing stop so that the entire trade is risk-free from now onward. NE, the third very weak stock in terms of fundamentals in the oil and gas drilling industry. In the weekly chart, 1 week ago, it ended with a long upper tail. That was the week when in the weekly market roundup, I was bearish on oil. Based on oil's bearishness and also this long upper tail, one would start to look for short trades. In the daily chart, 1 week ago, it displayed a bearish headwind signal. There was no bearish headwind short trade setup. However, looking at the weakness of the industry, fundamental weakness of the stock, weakness of oil, one might take a low risk short trade at the close of this day, putting stop just above recent high. By Friday, price came down enough to cover more than risk resistance. As price is staying just above the trendline support. In this case, one might book full profit. The headwind signal came very handy both in taking long trades in airline stocks and also taking short trades in oil and gas drilling stocks. Now we study the accelerating industries. They often tend to be the best performing industries in subsequent weeks. We are looking at the 10 most accelerating industries. We are looking at their 5 days and 10 days scores. For all these industries, we can see that the 5 days scores are significantly higher than their 10 days scores, showing that they accelerated heavily. Trucking is one of the accelerating industries. Using Q Vital or using drill down in QA, you can see that WERN has optimal valuation as well as positive recent quarter earnings growth. It went up by 5.9% after reversing from weekly auto-smart memory trendline. We saw this technique in use earlier also, both for swing trade as well as for day trade. Using the reversal from the weekly memory line, you could take a long trade on 17th July, combining the principles of box and bounce trade setups, and you could profit handsomely from there. Let's look at trucking industry, see how it accelerated, drill down into WERN, look at its fundamentals, and then how the technical charts could take us a very low risk long trade that gave significant profit. In QH, the accelerating industries show up with cyan color on the page column. These are the most accelerating industries in the current week. Trucking is of interest because it accelerated and it was weak, magenta, for a long time. This week it accelerated as shown by the page column, and the 5 days score shows that it is strong. So it accelerated and became very strong. Let's see how is WERN, WERN's fundamentals in this industry. We can drill down. WERN, WERN, from the heat map we can instantly see that the valuation is very good. The primary valuation column is in cyan color and the EPS columns are showing that it has recent quarter positive earnings growth. Let's look at the technical charts to see how using Q signals you could take a very low risk long entry. WERN, the tracking stock, using at a glance template. Just like we saw in several other cases, there was a weekly memory support trend line. This week, price initially dropped sharply, came precisely to the memory support line and went up from there. In the daily chart, the weekly memory support line was at this price level. On this day, price went down sharply with heavy activity. Next day, it went up, displayed a bull release signal, and the candle color turned yellow. price was going up from the weekly memory support level, and on the yellow candle it also closed above the white direction line. Therefore, we had a sharp drop. Price hit multiple support levels with possible signs of exhaustion. One could take a long right at the close of this yellow candle, put stop just below recent low, and as the stock went up, by Friday it covered much more than risk distance. This was the risk amount and the reward was much more than that. The industry accelerated. The stock is fundamentally strong. What would one do? Would one book full profit or partial profit in this case? We can see there is a memory resistance line nearby, both in daily and weekly charts. However, there is some distance to go before price hits those levels. Looking at that, one might either book full profit or book partial profit. It is up to the trader's discretion. During sector analysis, we saw that on Friday, financials went up, and for the week also, financials is the strongest sector. We have two financials industries among the 10 most accelerating industries. These are diversified capital markets and regional banks. KEY, Key, is a regional bank stock that is optimally valued and has recent quarter earnings growth, positive growth. Again, it went up precisely from weekly memory support and daily white direction line. In this case, you could take a long trade in Key using trend following, go with flow, long trade setup on 16th July that turned out to be very profitable. Let's look at regional banks, see how it accelerated using QA, look at Key's fundamental strength, and then look at the technical charts to see how you could take a very precise and confident trade using unambiguous trade setup. Just like tracking, regional banks also accelerated. We can see that from the cyan color in the pace column. Regional banks was weak for a long time and it became strong in this week. The 5-day score turned cyan. This would be the optimal time to start looking for long trades. Let's drill down. Key is a stock in the regional banks industry that is optimally valued, cyan color in the valuation column, and the quarterly earnings columns are showing that it is having improving quarterly earnings growth. The industry was accelerating. The stock was optimally valued with improving earnings growth. So you would keep an eye on such stocks to look for long entry opportunity on technical charts. Let's look at Q technical charts to see how easily you could take such a long trade. Key using at a glance template. Once again, there were multiple memory support trend lines in the weekly chart. This week, initially price tried to go below the trend line support but reversed. At this price point, you could start taking a long trade. In the daily chart, we also had many memory support lines. On this candle, it bounced from the memory support lines. However, the color was still red. At that time, price tried to go below the white direction line but closed above that. Next day, the candle color turned cyan. That is the optimal entry point for trend following long trend. We could say there was kind of higher high and higher low by that time. Price was supported by memory trend lines both in weekly as well as daily. Combining all these signals, one could take a long at the close of the cyan candle, put stop just below recent low, which would be below the memory support lines as well. By Thursday, price went up enough to cover more than risk distance and at least partial profit would be booked. In this case, we see there is no resistance trend line nearby. The weekly candle is very bullish. Industry is accelerating. The sector is also strong. The stock is fundamentally strong as well. Therefore, in this case, one would not have any reason to book full profit. Partial profit will be booked with discipline and partial position will be held trying to let profit run. We can see that there was a gap up move on Thursday related to earnings. Q traders are always careful and they check the earnings days. Because earnings was nearby, when the trend following long trade setup was confirmed on the cyan color candle, one might take the trade using short put verticals instead of taking it using long stock positions. If somebody was considering holding the stock for the long term, then one might take the long trade using stock as well. Otherwise, for swing traders, superior profit guideline is to avoid taking new trades using stocks just before earnings. Short put vertical would be appropriate because if the stock goes up, the options position will profit both from volatility crash as well as from delta move, as was the case in case of key. Once again, using the memory trend line support, one could take a profitable trade confidently. We are now studying the decelerating industries, 10 of the most decelerating industries. Deceleration often points to industries that are not weak yet. They are still strong, but the weakness shows up in deceleration. That is true for managed health care this week. The industry is still strong, but we can say the 10-day score was much more than 5-day score. These two stocks, AET and UNH, both are at or near 52-week high. Both AET and UNH are at very high price levels. On technical charts, using Q vital statistics, we can see both are fundamentally overvalued. Both displayed bearish headwind at the very top, while the stocks were near watermark pivot resistance level. So we had a situation where the industry decelerated, the stocks were fundamentally overvalued. On technical charts, we had bearish headwind, possible reversal signals near watermark resistance level. Looking at all these signals, long position holders would certainly protect profit and one might start to look for short trades. Let's look at QH to see how deceleration pointed to possible weakness of managed healthcare. Drill down into the stocks and look at AET and UNH's fundamentals, and then finally look at the technical charts to see the bearish signals there. In QH, the decelerating industries show up with magenta color in the pace column. managed healthcare was strong for a long time. Therefore, the stocks may be at a very high price level. We can see this week's score is not magenta yet. You can see that alternative carriers is magenta. It is already very weak. Managed healthcare is not magenta. It is not cyan. It is somewhere in the middle. However, the base column is showing the weakness that is not available from the industry's performance. Looking at that, one will be careful and drill down probably. Let's drill down. These two stocks, AET and UNH, both have magenta color valuation score. That is, they are overvalued. Let's look at technical charts to see if there was any bearish signal on the Q charts. AET using at a glance template, price tried to come to the watermark resistance level. Last week closed just below the watermark resistance. This week it again tried to go above the watermark resistance and fell down again. This week has displayed a bearish headwind signal. In the daily chart, there was one watermark resistance level for 3 successive days. Price tried to go above that but closed with long upper tails. Looking at that, one would start to look for possible short trends. We had a bear release signal on this day. However, in this case, we would not enter any short trade because memory support trend line was nearby. Instead, if one had a long position, one would protect profit using trailing stop. On Friday, price closed down heavily with very high activity. Price is just above memory support again. Therefore, one would not like to take any swing short trade right now. However, long position holders may be careful. UNH, the second managed healthcare stock. Again, this stock displayed a bearish headwind this week. The candle shape is mixed. It has solid body but long lower tail. We had an earnings week this week. In the daily chart, there was a bearish headwind earlier that could catch the very top. Price fell down from there. That bearish headwind candle created a watermark resistance line. Price tried to go back up to that level, and on this candle we had a bear release signal. That was just before earnings. I have mentioned many times in earlier market roundups that if we have a bearish headwind signal that is able to bring price down, when price comes back to that level, some more selling may be left. Using that insight and the bear release signal, one might take a short trade just before earnings. Because it was just before earnings, one would not take a short trade using stocks but could take it using short call vertical. That would be low risk and the trade would be extremely profitable as price fell down heavily the very next day. The short call vertical trade would benefit heavily from volatility crash as well as from the delta price move. Right now, just like in case of AET, price is close to trendline support. Therefore, one would not take any short trade. If there is a long position, then one may be careful and protect profit using trailing stop. Those were the regular topics. We discussed the best performing stocks UAL, GOL, AZUL, worst performing stocks RDC, ESV, NE, accelerating industry stocks WERN and key decelerating industry stocks AET and UNH. I have several other stocks of interest: NOAA, HF, TWOU, TEO, PCJE in Indian market. We have discussed TEO already. Let me summarize the market roundup and then I will stop the recording and I will like to discuss quickly the other stocks to show how Q systems could be used to take profitable trades or to protect existing positions. But let me summarize the market roundup first. From the market breadth analysis, we see that the market is indecisive at the right edge, though over longer term it is bullish. The broad ETF study also revealed the same insight. The ETFs are continuing to be at or near resistance levels. This week price didn't move much, it is indecisive. Sector level is showing flip-flop across the 3 review periods. From the market and sector level, we see this is not a good time to take directional swing trades. At the same time, because probably the flip-flop is happening, drilling down to industries, identifying strong or weak industries, and then identifying strong and weak fundamental stocks respectively, we could identify several very profitable reversal setups. We could also identify some trend following setups. All those trades could be taken by combining the forces from industry level, fundamental level, and technical level. In this way, in all market conditions using Q systems, we are able to identify profitable trades. Some of them are extreme reversal trades that others probably would not be able to take. Financials as a sector is strong. It is turning around from weakness. Financials is the strongest for the week and it also went up on Friday. Consumer staples is another sector that was weak for a long time. You may look for potential trades in these two sectors in the coming week. That was all that I wanted to share in this week's roundup. Thank you for attending. I look forward to seeing you in our next session. Have a great weekend and trade profitably.